Expectations are everything in this business. When a stock runs up into earnings, the results had better be picture perfect. Anything less than that's going to sell off. So just look at Paychex, the second largest payroll processor in America. It's growing sideline in HR outsourcing. This morning, Paychex reported a robust quarter. They beat Wall Street's earnings estimates by a penny, off an 88-cent basis, with higher than expected revenue, up 14% year over year. But it wasn't perfect. Management left their guidance for 2019 fiscal year untouched. They're conservative people. Some else were hoping they'd raise numbers. Preliminary revenue growth, some thought tad disappointing. While I like the numbers, Paychex had rallied 23% year-to-date going into the quarter, 23%. So its shares got a little ding today, down a little bit over 1%. At one point, it was much more down. But here's the thing. This stock has a habit of pulling back after Paychex reports solid results, and then a few days later starts climbing again. Can that pattern continue? Let's check in with Martin Mucci. He's the president and CEO of Paychex to get a better sense of the quarter, where his company's headed. Marty, welcome back to Mad Money.
Thanks, Jim. Good to be here.
Marty, you are putting on some incredibly really accelerating organic revenue growth, 7%. That's four consecutive quarters of acceleration, up from 4 and change for Q4 18. How are you doing it?
Well, it's our HR outsourcing is the primary one. That's growing double digits, very strong demand for those services. And perfect time that we've introduced more product enhancements in the last quarter that will really help small and mid-sized businesses bring in more employees and keep them and retain them in their business.
You're also the penetration of HR services. Companies outsourcing more than their HR spend is really going your way. You are getting in with one of your products, and then you're landing and expanding with the rest, I imagine.
We really are. You know, sometimes it just starts with payroll and basic HR support, sometimes time and attendance solutions, and then it quickly grows to retirement. And now our learning management helps train employees as well as performance manage them, and data analytics. We're adding a lot of data analytics using our large client base for companies to see how they compare to other companies across the country.
Well, let's go there, because you did talk about bots. You talked about artificial intelligence. You talked about a lot of tech. That was the first time I really just heard you drill down on that. So explain to people, because we have all these tech companies. Come on, we had a Live Person. Come on, we had this Five9. Come on, yesterday. There are a lot of different services that you are using, chatbots, whatever, to become much more productive.
We are, and it's really because of the client demand. You know, Jim, a lot of clients and their employees really are demanding self-service now. They're looking for ways to go in and get answers and do things themselves. And the chat bots, basically, we allow chat with live chat, but a lot of things can be answered by a chat bot alone, which is an automatic response that's very quick and can take the client right to what they need to do. Over 45% of our chats now are done by the chat bot. They're done and resolved right there. It helps the client quickly resolve what their issue is without ever having to talk to anybody. Much more efficient for everyone involved.
Now, on this call also, you did the best exposition I've heard about the macro economy. I mean, you talked about what it's like to actually the unintended consequences of full employment, right?
Yeah. Yes, it is. As you know, small and mid-sized businesses a lot of times can't compete for employees in a tough market like it is today.
Right.
But a lot of the products that we give them, these employees are looking for, even if it's a small and mid-sized business, do they have health insurance? Do they offer a retirement plan? And that's why the demand is growing for these services, even as a small business today.
How do you weave through the notion of the different cannabis laws? And also people who got arrested, went to jail for cannabis, and they actually are, I mean, these days they wouldn't be arrested. I mean, it just seems like state to state. I mean, everybody's trying to figure out what to do with this stuff.
Yeah, it's a big challenge because it's state by state, right? If it was a federal law, it would be one thing, but these are state by state. Some states allow it for recreational, some only for medicine purposes, and others don't allow it at all. So we're really working, our 500 HR specialists around the country are working with our clients to help them design a drug policy, evolve their drug policy, to really help them know what to do to stay out of any issues that they may have when hiring or terminating an employee.
I've got to give you your due on Oasis. I think it was a fabulous acquisition. We haven't really talked about it. Why don't you tell people what this brought? Because PEO is a term that may not be as well known with our audience as it is in your industry.
Yeah, from a PEO, a professional employer organization, is really where you become we become a co-employer with you. So many companies, we can give a much better health insurance plan if they pass the underwriting, they can get into a health insurance plan that offers them much better options than they normally would be able to as a smaller mid-sized company. That attracts and retains employees. And the combination of Oasis, which was the largest private PEO we acquired December 20th, has been very strong for both of us. We're going to have larger scale. That gives us better relationships with insurance carriers, expands into more states, and allows us to sell our wide product offerings to the Oasis base that has been in place already.
Now, why were you able to get that? I mean, to me, that was just a plum acquisition. So many people want to be in that business. It was just available to you. I mean, you kind of, I'm not saying you stole it because they're good people, but that was a great acquisition.
Yeah.
How'd you get it?
It was. Well, thanks. We've been in the PEO business ourselves for about 20 years now, so we had an expertise in that. We had bought HROI, another PEO, the previous year, and I think Oasis and the leadership team there, Mark Perlberg and the team that are staying with Oasis with us and now leading our PEO business, saw the strength of Paychex and the strength of scale of coming together and really liked our aggressive ability to go out and proactively offer a great product set to clients to drive their growth and our growth together. So the integration is well underway, and we're feeling really good about double-digit growth continuing in that PEO business.
That's fabulous. One last question. You have a great handle on things. I have to believe with the unemployment the way it is, the state of the consumer is much better than we often chatter about on TV.
Yeah, I think it is. I think, consumer confidence is still strong. I think the businesses, the optimism is down a little bit for businesses, but it's mostly because it's difficulty finding someone, right, to hire, as we've talked about. But they are finding ways to do that. You're bringing in more of the fringe, those who weren't necessarily interested in being employed before, now coming in and actually being trained by the businesses. It's a positive thing, and I think, the economy still looks strong. There's still good consumer confidence and need for products. It's just filling the jobs is the toughest part right now.
Well, let's leave it there because that's certainly a high-quality problem for our country. That's Martin Mucci, President and CEO of Paychex. Thank you so much, sir.
Thanks, Jim.
We've been on this stock for double, telling you to continue to own it. I think it could go up much more. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.